The katana has fallen. Rome has fallen. London has fallen. America has fallen. Everything has fallen. Everything has gone to shit. And we're over here catching katanas that are this big. I know, it's not a katana. This is the sexiest knife that Cyril has. And as a knife guy, look at that. You can appreciate that. Okay? So, it's fallen. And I'm on this shitty camera at Cyril's house. So now this is what we're going to cover. No, this is what we're going to cover. No, this is what we're going to cover. All right, normally I have this script somewhere else, but you're getting a behind the scenes view. If you want to hear about all these things, the VIX spike, what happened, profit taking, why I did this, what's the data saying, stick around. Otherwise, go to TikTok, watch, stupid shit, watch chicks shake their booty, and destroy your own mind, and do the dirty things that you do, you dirty boy. Otherwise, LF to the motherfucking G. First of all, extreme fear in the stock market. If this that needle could break and just snap down further, it would, but it can't. That's not how it's coded. Now, it happened. How the fuck did we know it was going to happen? Nobody has a crystal ball, Sam. Nobody can predict things. Nobody can see these kind of crises coming. No, it's like if you just read a book or two, if you just watch the Changing World Order, if you study how previous times this has happened, if you read The Fourth Turning, and if you spend every waking moment since when you were 15 until now studying everything from quantum mechanics to the, every single thing that you could find, it's easy. It's like super fucking easy. Anybody can do it. Just gotta not have a life and family and anybody to distract you from being focused on escaping the matrix, right? Super, super simple. So, do we buy this fear? Duh. Like, duh. Yeah, you buy this fear. Crypto is an extreme fear, but it's at 18. And on one side, I see crypto going down to 70. On the other side, I'm going to get into it. But first, take a look at this. What were we waiting for, and what happened? We were waiting for the VIX to go above. I'd said 37. It went above 37. It went up here to 60, which is extreme. It has never gone up to 60 unless the yen panic, and that one time people started coughing and stuff, and everybody freaked out. So this basically means world-ending shit. So it went up here. It did this. I was like, oh, looks like it's reversing. Happy to buy that. Could it go higher? Sure, absolutely. You don't expect not to bleed when catching a katana. Katanas and blood are besties. They've been hanging out together since they were born, and they're meant to be together, to be honest. So if you're catching katanas, you better have tough hands after tearing your own hands off and regrowing them. In which case, hopefully, you won't cry too much when you bleed. But the VIX spiked. The thesis was met. Most of the things went to targets. The ridiculous targets we had set on some of the things didn't get hit, but those were ridiculous targets for a reason. Okay? The world-ending shit happens. Now, this was actually a cool little introduction by Cyril. This is the VIX. If you're like, who's Cyril? Don't worry, you'll meet him. We're trying to get him on camera, but he's a shy little kitten, so he doesn't like to. Okay, come over here for a second with your tattoos. No, you can keep the shirt off. It's okay. Just he doesn't have pants on. He doesn't have shirts on. I also look like this all the time. This is Cyril. All right, he's part of the magic that happens here. So you will get to hear his wisdom soon with a shirt on. We'll put a shirt on because we don't want a sexy flexi on you guys. So this VIX, this is the capital.com VIX. This is a global VIX. It's open anytime any global market is open. This VIX, the TVC VIX, is the American VIX, which is only open when the American markets are either in pre-market or open. Okay. Regardless, both of them spiked, and at the same time, I forgot what I was going to talk about. Right, traditional markets fall. Ha! If you're like, man, you deliver so much wisdom, it's because I write it out early to make sure I can deliver it. So when the VIX spiked, it was interesting. We're sitting here, we're in Asia. So the next thing that happens is Japan falls. Japan tumbles. This is the Nikkei. Japan tumbles. Okay, this white, because I'm weird. No, it's because I have my screen set to black and white often, and my green candles are white. This this drop was a big gap, and you see massive volume on it. Japan falls. Interesting. Then you go check the Japanese yen. The yen starts to pump. Nothing world-ending-y, nothing like the pump that we had in what was it, the yen spike, which was like right here. But you know, it made a move. Okay, cool. Next thing, China opens. Boom. Boom. China goes boom. Next thing, every country opens one by one, right? Japan stopped futures trading. Then, you know, what was it? What was it? CAC? CAC from France opens. Yeah, the CAC opens, falls. London opens, falls. Switzerland opens, stops, halts trading on all things. Thailand opens, does some crazy shit. I think shut down their entire market. Singapore opens, has the worst time they've ever had in lifetimes. And then you get over to the Americas, and America had already tumbled a decent bit and makes a violent move back, okay, on insane volume. So that is about as good of a confirmation as I need to catch that katana. Now, another interesting perspective to take is this one, BVOL 7D. See, this is the VIX of Bitcoin. So I was looking at this thing and I was like, look, when does it react? No, let's add Bitcoin on top of this. Bitcoin, new price scale, go back. Okay. So it's like, when does Bitcoin fall? When this thing is in a bearish state, right? So when volatility is low, Bitcoin is stable. See the purple line? Bitcoin is stable. Right here, Bitcoin is stable. Then when this shoots up, Bitcoin falls. Then as this tops out, usually like as it starts to slow down, Bitcoin slows down as it's tumbling. And then in the final piece, Bitcoin falls a little bit. But actually the vast majority of the move happens when this thing is coming up. And then when volatility goes down, Bitcoin kind of chops around, bores everybody, hangs out. Okay. So we had this move in the volatility, and that caused this fall. Now, could it go down to 70? Yeah. Is it likely to go down to 70? Yeah. But am I expecting violent recoveries in the stock market? Yeah. Now, this could very well just go up here, stabilize, and Bitcoin goes into a boring zone or goes into a recovery zone, and everybody, you know, thinks everything's perfectly fine. So what we did is made the move and went in and bought all the assets, which we're going to go through, right? So now, why? Why all in? So there's two ways to approach this thing, right? The timid approach is to go in and dollar cost average. If I was just doing this to just buy this and just hold it to the end, dollar cost averaging is the smartest thing to do. That is what you should be doing. That's what most people should be doing. Most logical headed investors that put on a helmet when they ride their bike should be doing that. Now, my thesis is a little different. I think this fall was so violent that there's going to be violent recoveries and then violent falls. And in that violent recovery, you know, the previous times I was sitting out of the market or I was sitting on cash, or, you know, in that violent recovery, there's a lot of profit to be taken. When the katana falls, if you catch it, there's a lot of money to be made, even in those short recoveries. So, made the executive decision to take 100% risk at those prices. So what's the risk at that point? It's like, if I get SWE for $2, if it goes lower and I have to hold it through, and then later on, will it be way higher than $2? Yes. So the risk on the long hold is mitigated if I had to do that. On the positive side, if this violent recovery happens and we get to take profits, that's multiplying the stack further. Okay? Yes, I could have dollar cost averaged into it. That's just not my style. So now, what's happening? Now, there you go. Profit taken and redeployment. Covered. BVOL, covered. Indexes versus liquidity. Let's look at that. Okay, so when you are looking at the crypto market, right? Like, for example, others. when you compare it to liquidity with a 15-week offset, because we're cool, okay, it looks like it's bottomed out. Could it go further? Yeah, things can always go lower than you expect, and things can always go higher than you expect. But liquidity thesis says it has bottomed out. Liquidity bottoms out there, others bottoms out there. The synchronicity has been nearly perfect. I mean, that correlation is dead perfect going back to the top. So there you go, confluence. Okay, the world is in extreme fear. Everybody thinks the sky is falling, even though it doesn't even exist. It's just air. The fall happened. It touched the bottom from here. From here, expecting a violent recovery, not just like a violent recovery in the entire crypto market all of a sudden, but moves are significant. You know, some of the meme coins did a 23-25% pump in this time, and that's where there's a decent bit of cash to be made to then redeploy. So, total market cap, it's not bottomed out yet. That this is where the Bitcoin move still has time to go. When Bitcoin drops, everything drops with it, but also everything recovers super quick back to its levels. So it could go still lower, but then again, this says, like if you run this on Bitcoin, where did I put it? Yeah, I had to move Bitcoin to the top just for efficiency's sake. You know? I mean, this is saying Bitcoin going down to 64, 65. Cool. Yeah, great. That sounds like a normal move for Bitcoin, and it will likely do that. Okay. In hindsight, I probably will have wanted to wait, but then again, this is the second katana catch. Okay, get off my back, mom. Jesus Christ, I'm making you fucking rich. So, comparatively, when you compare liquidity versus the indices, it is signaling that we're at insane buying prices, and we're going to go through the assets. Now, when you compare the dollar, you wouldn't really put it on the liquidity. I mean, Jesus, that's a perfect correlation. Insane. No, the dollar isn't just going to go up with it. The markets correlate and look like this for a reason, because macro has flipped. When macro goes back to what it's normally done, dollar falls and liquidity goes up and assets fly. Now, dollars and yields are a huge factor in liquidity. And I just learned this from the Raul bot and asking Raul a question. That, not just learned this, but defined this in a very clear manner. That when the dollar falls, the other currencies can buy American assets cheaper, therefore it increases liquidity in the markets. When the yields fall, the cost of borrowing money becomes cheaper, which means more liquidity is introduced into the markets from lending. Okay? The dollar has been on this precipitous fall. What does that mean? Precipitous rise in liquidity. Check, 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 check. Okay? And it's in the cards already. The yields have had a precipitous fall, which, by the way, there's a correction. I need to correct myself. The last video I said when yields fall, people are not buying bonds. I don't know what I've been smoking. I don't know what I've been vaping, but that is not true. These are lies perpetrated by the fake news media. Do not believe them. I want to correct that. When yields fall, people are buying bonds. Okay, jeez. But yields had this insane fall, which means liquidity going forward had this insane rise, right? So all of that has lined up and put in the cards that at some point liquidity is going to do an insane move. Now, look at the insane move yields just made. I mean, this move we have not seen. I don't think we've seen this in history. Okay? Garrett's guy was saying that we haven't seen this in the recent history, but I have not seen this in history on a chart of the yields ever. Think about it. If things are going down, if yields are going down, and people are buying bonds and they're selling assets, when yields spike like this means the ocean just went. The ocean, I'll do that again. Ocean just went. This is a very, you like normal people won't understand it. This is a financial thing, like bull, bear, and then like that, right? So this means there's an insane amount of liquidity that just left the bond market, and guess where it goes? It goes to buy assets. Now, is it a surprise that the U.S. stock market pumped in this insane when this candle happened? No. That liquidity moved out of bonds, popped into the stock market, and more has gone in, and more has gone in. Okay, Yet when you look at the stock market, it's done this. This is the S&P 500. That money moves out of bonds, goes into the stock market. The entire world's markets collapse. America makes a bounce because, you know, they do whatever the fuck they want because it's all controlled. Then more liquidity goes in. Even though this was a gap up and a drop, more liquidity goes in and saves the markets. Now the yields are saying there's more liquidity being drained out. So that means this is probably a local bottom. Is this the bottom? Who fucking knows? I mean, this channel puts the bottom down to here. But at this point, come on. If we've gone from here down to here, okay? First of all, this channel is not the right channel. This is on the wrong index. Let's look at it on the NASDAQ, okay? And I don't have the channel here. This is how prepared I am. Okay? Who cares, man? All right? Just money go from there. Money go to here. Money make it go up. More money make it go up. You look at the volume of money, okay? This volume was rising as things were dropping. Volume tops out here. Now volume is starting to go back down, which means things are calming down and subsiding. And when you get to this level of fear, especially in the stock market, this event had not happened since 1987. So yes, I just called the next fucking 1987. Yeah, I'm gonna gloat about that. Yeah, I called it. Bitches, what's up? All right, I'll calm down. Sorry, relax. Let's get back to the point. So when I forgot. What was I talking about? He doesn't remember either. He's not even listening. Okay. Look at this. Everything's bottomed out. The fear has gone insane. There's positive divergence forming on the hybrid indicator, which is significantly more effective than the individual indicators like the RSI and MACD and stuff, because it takes them all into consideration. It's very slight, but it's forming. Okay, there you go. A positive divergence is forming. Prices are going down. Indicators are going up. Volume is dropping. All of those are signals that things are turning. Now, what I expect is that, let's say, okay, SUI, the entry was right there, $2. What I expect is, if Bitcoin doesn't go to 70, there will be some kind of major recovery in SUI, probably going up to this range, 270, 280, who knows? Ask a chartist who's smarter than me. In that recovery, take profits. Because the expectation is, when Bitcoin snaps lower and goes back down to that 69, 65K zone, there's cash to be deployed down there. Okay? Near, the entry was right here, $2. Now, if near has gone all the way up to, let's actually pull up the weekly to make sure there's no data missed. Yep, there you go. Near's been at 20, and I'm getting it for 2. I'm happy with it. A 90% discount on near, happy with it. SUI has been up to 5, but it's a new coin. It came down to 2, happy with it. Target was what, the $1.50. Did I have the patience? No. Also, you know, in this case, I'm not sure of anything anymore, so I'd much rather take the discounts when they're there than think that my thinky brain is some kind of smarty genius, and I'm a know-it-all, because I'm not. Render, got it for, what was it, like 290? 290 something? Somewhere around here. It was chaos. 290. Okay, so it was 290 is the entry on render. I'll change it later. 290 was the entry on render. Render's been up to 13. Okay, ridiculous discount on that. So and then okay, fine. I know you're gonna be like, do Jupe, do Pith. Okay, so Jupe entry, not this one. That was the target. Entry was well below target, 35 cents ish. It's been up to $1.90. Fantastic. Pith, target was 14. Entry was somewhere around 11. Top is around $1.15, right? So when I say target was this and entry was this, if you set a price point on an asset and say, wow, this asset at this price is an amazing discount for me. I wished I had bought it at that price when things were good. Therefore, now I would be happy to buy it at that price. Once it goes below that, I will be happy and I will giggle And if it goes lower than that, I won't cry because I had decided those were the good prices. Okay. SPX around this 48 cent mark, Giga around this 1.4 cent mark, and WIF the target was at 42. Entry was somewhere around 35 cents. 35 cents. Okay, so now from here, yeah, what to do going forward? From here, there's two options. Okay, first of all, an event like this rarely happens. So capitalizing on it, there's two paths forward. One is things go down, one is things go up. Well, let's talk about three. One is things have a recovery, a massive recovery, and then go down. One is things just go down from here, and then one is things shoot up, right? So if it just goes down from here, chill, because I got great prices. Hold on to this thing right through the turbulence. On the long term, it'll all turn into a pimple and a completely insignificant thing. This just reminds me of like when Bitcoin was $5 and we were, if you bought it for $5 and then you got angry when it went to $3. Cute, really cute, right? You never even look back at that once it was at $1,200 in the same cycle. So if things just go down from here, HODL, DFTU, don't fuck this up. HODL, hold on for DLI. HODL, hold, don't fuck this up. If there's a massive recovery, which is normal in these kind of violence events, see, the volatility on the downside is representative of the volatility on the upside. So volatility is volatility, right? Like, so when things drop, if there's a violent recovery up, I'm going to take profits in that time. And then when there's a probably a lower low made or double bottom made or something like that, redeploy those profits again and just add that little bit extra juice to the portfolio. If things just bottom out and turn and run away, we're in the good. Now we're in the good times. So what does liquidity say? What does our old friend, my favorite T, the liquidity T, what does it say? It says that, I like the others chart because that's where we're mostly exposed. I mean, Cyril's exposed everywhere right now. Go put some pants on, my guy. Okay, the camera's getting shy. This is what liquidity says should happen. Now, of course, it's not perfectly aligned or perfectly timed. The delays shift. This could be delayed weeks and weeks or months, depends on what happens. But liquidity now says at some point, Bitcoin and crypto assets should be back to their all-time highs. Raul guys are saying that this is going to happen within the next 3 months. Those guys, I know what they're talking about. This also looks like it's bottomed out, looking at it from that perspective. If you zoom out a decent bit and you correlate it, I mean, the correlation started lining up really well when BlackRock started the ETFs and things. That was like right around here. Because, of course, when you connect it to BlackRock's liquidity pipelines, the correlation becomes near perfect. So this thing looks like it's bottomed out. Looks like there's another month or so of turbulence. Now, cyclical analysis of the stock market, the harmonic analysis from Slim says that there potentially is a lower bottom that happens at the end of the month, somewhere around like, end of April to somewhere around May. So we're not out of the woods yet fully. If you have more cash to deploy, you do whatever the fuck you want. I'm not telling you what you do. If I had more cash to deploy, I would find it, but I don't have any cash because I'm a brokey. In this case, we just wait this out. The whole point is not to try to catch the very bottom of this, not to try to catch the very bottom of this, and not to try to catch the very top of this. Nobody does that. Well, somebody somewhere does that. We got to stop saying that. Somebody somewhere does that, but that's not you, and that's not me. For sure. Okay? The point is to capture this middle part. Capture, if you can capture anywhere near like 15% away from the top and 15% away from the bottom, you're fucking crushing it. Because you are capturing 70% of the moves. 70% of the move down, 70% of the move up. Somewhere there. I think this one's going to end up being even better for me, but then, then again, this one was, this is a mind-blowing thing that, it actually is blowing my fucking mind that the framework is working this well. That when the entire world's saying everything's fine, you call these things and they actually work. That means the thesis that we're coming from, that I'm coming from, and the data that's being fed into it, and the analysis that's being done, and the results that are being projected are correct, right? The same way my framework of thinking said COVID would happen, and I was ready for it 5 years ahead of time and continued. Now, you got to be, if you're wrong for 5 years, I never said it would happen. I was 2 years early in calling it. If I'm wrong for 2 years, I lose nothing. But if I'm right that one time, I move to Bali 6 days before and my life improves, right? Same thing here. If you're wrong before and you don't sell, but you have this understanding that something's going to happen, you don't lose anything. If you sell close, which, all of us, we did it somewhere around here, you're nailing it. Now, if you buy somewhere in the area code of this thing, then you're good. Okay, so now what's happened? We're nailing it. Don't get greedy. Just whatever. These are insane discounts. If there's more discounts, fantastic. Dollar cost average. Everything is bottomed out. These indicators don't go down to these levels until, like, this was the yen panic. It went down. We're at that level. Before that, these indicators were at these levels at... You get the idea. It's something world-ending has to happen for it to get down to those levels, and those levels have been achieved. Now, the next question that comes up is profit taking. How much profit? How do I take it? You decide that. I'm not telling you how much profit you should take. That's up to you, your own strategy. We're even flexible on that and figuring out where does it go and how much profit do we take. So it's ill-defined, but if there's a violent recovery and I'm expecting another fall and Bitcoin hasn't gone down to 69, 65, that zone, then yes, some piece of profit taken off the top and then redeployed at the bottom is going to be fantastic. And then our classic move, just meditate, just relax. The world is not ending. We're not going into a recession. This is actually the final piece of the tourist shakeout. So now, if you've been with me for some time, now you've experienced the tourist shakeout, right? Some of you have experienced the 2021 tourist shakeout, so you know exactly how that goes, or the 2020 tourist shakeout. That one was a five-letter word. It was called COVID. Okay, and this tourist shakeout it's a four-letter word. No, it's still a five-letter word. TRUMP. It's all five-letter words that cause all this stuff. Okay, that's just a side note. So it's just chaos. It's just fear. It's just to shake you out of the positions. It's just to scare you and convince you that crypto's shit and it's not going to go anywhere and blah 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 blah. Everybody who was jumping for joy to buy SUI at $5 and buy all these assets at all-time highs, were telling you in December, oh my God, here we go, Trump is here, we're all going to get rich, blah 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 blah. Those people will not touch it here at all. They go, Trump is going to crash the markets and blah, blah, whatever garbage is being peddled on the news that I don't watch is going to happen here. Yeah, this moment, this kind of event playing out, all this data being where it is, it's telling you this is the most opportune moment in history. And when that next recovery starts and the rocket ship leaves, the rocket ship fucking leaves. There's no looking back. There's no, give you the chance and hang out. If anything, it's going to hang out here for a while smart money loads up on all these assets, right? It could hang out for a decent bit of time while they load up. Be smart money. Be like the whales. Accumulate and then poop in the ocean and create plankton, because that is how we stop the carbon or something. Now, over here, no, over here, no, over here, no, fuck, oi, my lefts and rights are all messed up. Over here, there's going to be another video that pops up. Don't watch it. I know you're a rebel. If I tell you not to watch it, you'll watch it. I know you want to watch it. Click it. Click it.